What's going on, people, man? We're back again, and you already know what time it is, man. We're back, another location, and we got some stuff to talk about, man. Some stuff we need to talk about. We need to talk about what's going on. Yo, check those seagulls, man. Look how many seagulls there are. That's crazy. What are they doing, man? What are they doing? They're all lining up, like, that's crazy. Yeah, seagulls freak me out, man. But yeah, we got to talk about what's going on, man, in the market. What is going on? The price of gold's going crazy. And yeah, man, we got to talk about this stuff, man. So, you already know. It's another walk. I'm about to go hit legs shortly. So yeah, man, we're gonna break it down, man. I'm gonna give you my thesis. We're gonna talk a little bit about what's going on in the markets right now. Because it's crazy, man. We've got good old gold. That old dog, man, just keeps surprising us. So I don't know what the percentage is right now, what it's up. I ain't got a clue. I'll be guessing otherwise. But I know it's crazy. I know it's killing the market right now. And when I say market, I mean the S&P, which is the benchmark of the stock market. No coffee today, though, man. No coffee today, guys, man. Like I've been hitting them too hard lately, man. So I'm trying to go on a sabbatical with that. So I'm 1 day in so far, so we'll see how we go. Guys, have you ever noticed how every time you check Bitcoin's price, it feels like it's either on top of the world or being buried 6 feet under? There never seems to be no in between. But just lately, I've been thinking maybe that won't always be the case. Maybe Bitcoin will eventually slow down, kind of like gold did. Now, gold wasn't always calm, steady, that store of value we know it of today. It's had its wild years too, decades of chaos, crashes, and rediscovery. And the more you look at Bitcoin's history next to gold's, the more it starts to feel like we're watching the same movie play out again, just way faster. And this time it's digital. But we've got to go back for a second. So before the 1900s, gold didn't really move in price. But that's because governments fixed it. It was the money. So you didn't see those big swings. Then came World Wars, the Great Depression, and eventually an end of an era, end of the gold standard. And that's when things started to get interesting. That's when gold was finally allowed to trade freely in 1971. It exploded, going from about $35 all the way to $800 in less than a decade, which is crazy, man. That's not steady store of value. That's straight up madness. So volatility was roughly, anywhere between 40% a year, which was just nuts. And could you imagine if we had Twitter back then? But over time, gold started to calm down. Now, by the late 1980s, inflation started to cool off. Central banks were way more predictable, and markets started to mature. Now, through to the 90s, through to the early 2000s, volatility dropped around about 10 to 15%. And gold just became, kind of boring again, but in a good way. And that's when gold started to earn its reputation as a stable hedge. Not because it was always that way, but because it became that way over time. Now, we've got to flip on the other side to Bitcoin now. Now, it's easy to forget, but Bitcoin's only been around, since 2009. That's basically a horny teenager compared to gold's 5,000-year career. And just like gold, it started out crazy, volatile, because people were still trying to figure it out. Still trying to work out what it was worth, what it is, what it's all about. Is it a scam? And early on, annual volatility was around about 150 to 200%. Prices could literally double overnight or drop half before your lunch break. But then something started changing. We started seeing institutions coming in. ETFs started being launched. Big investors started putting money into this asset class and taking it seriously. And with that, those wild swings started to shrink. And by the last few years, Bitcoin's volatility has been sitting closer to 40 to 60%. Still high, but we're clearly seeing it's trending down. Now, if you zoomed out, that's a clear pattern to me. Now, each cycle, we see less chaos. Now, it comes down to one thing. Both Bitcoin and gold share a fixed supply. Gold supply only grows about 1 to 2% per year. Now, Bitcoin's is capped. We know 21 million coins ever. And as of now, pretty much almost all of that supply is already been mined. And that means over time, there's less new Bitcoin entering the marketplace. So the only thing that really moves the price anymore is the demand. And as the market grows and the more people own it, those demand swings will start to get smaller also. So think of it kind of like a lake. You know, in the beginning, it's just a puddle. It's a little splash, makes a few moves. But as it fills up, those same splash barely, touch the surface. Those ripples don't do anything going forward. Now that's what's happening when an asset class starts to mature. Now we're seeing gold go through it. Bitcoin's going through it right now. Now eventually, new money flowing in will start slowing it down. And most of that supply sits in long-term hands. And when that happens, volatility naturally fades. Now it won't be a straight line down, don't get me wrong. And Bitcoin still has a few wild cards to go. Don't get it twisted. It doesn't have an interest rate or a yield, so its fair value literally solely depends on the confidence of investors and the liquidity out in the marketplace. And governments, they still haven't, figured out what it is. They haven't fixed their minds about it. And on the other side, there's crypto traders. They love a bit of leverage also. So that means there will still be plenty of drama. Now, it might just come in smaller doses over time, but directionally, the trend's clear to me. With every adoption cycle, every year of survival, Bitcoin gets a little more grown up. Less lottery ticket vibes and more macro asset, something people can trust in. Now, gold's history is any guide. Bitcoin's volatility will likely just keep declining through the next decade. So by 2030, we could be seeing maybe just 20 to 25% annual volatility, roughly double gold's. Now, way calmer than what we're seeing today. And potentially, Bitcoin might get to a point where it's not exciting as much anymore. It might just be, exciting because it's starting to endure and be a solid asset class we can trust. And that's when you know something's truly becoming real money. When it's stable enough to be boring. Now, gold took centuries to get there. Bitcoin might do it in a couple decades. And it's the same path, just compressed into a digital era. So yeah, maybe one day Bitcoin won't make headlines every single week. Maybe it will just quietly exist, like gold does now, doing its job in the background while everyone argues about the next shiny thing they need to put their money into. And honestly, that's probably the best outcome possible for all of us, because stability is where the final stage of success starts to form. But anyway, guys, those are just my thoughts for today's walk, man. Like I said, anything I talk about, take it with a pinch of salt, man. These aren't investment advice. This is just entertainment and educational purposes, man. But yeah, guys, man, we're going to finish the walk. Let me know what you think in the comments, man. Is Bitcoin still a buy? Do we see it moving the way gold did? Is gold more the investment to be putting our money into now, man? Let me know what you think. I think there's a place in the portfolio for both. But yeah, for now, signing out. I'll see you guys in the next one.